Hello, everyone. My name is Matthew Frailey, CEO of BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms. Like you see here, since 2003, over 20 years for individual traders and professional institutions. Okay, going to give you guys a midweek update since my weekend newsletter. So I'm going to go and get the back end newsletter recording started here. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, May 10th midweek update. As you can see with the table of contents, the newsletter is divided into five major sections, the same general theme as we always keep. And by the way, on trade ideas, we've had some really nice trade ideas here, and I did add a handful of new ones tonight to monitor. Okay. As far as the market, it's been a very choppy action as of late, especially today. Today we saw a big zigzag move to the downside. Weakness once again, especially in the regional banks. But the market then bottomed around 1:30 p.m., did basically a V rally and rallied strongly into the afternoon, pretty much into the close, which allowed the major indexes to almost all close positive except for the Dow. The S&P closed up about 0.5%, while the NASDAQ closed up 1%. Remember, we are still in earnings season a little bit here. Disney reported tonight, the mouse, and they're down after hours. So that said, the market's been in a choppy fashion the last few days. That said, that what I call the generals, one of our jokes is instead of the S&P 500, let's call it the S&P 5 or the NASDAQ 10. You have just a handful of what I call generals holding up the entire market. But again, that is not sustainable longer term, but that could sustain for a while. And one thing I did note today was that Apple and Microsoft continue to have a bid to them despite the fact when the market was selling off. So that told me we were likely going to bounce, and that's what happened today. And the other thing I noticed is that Apple looks like it really wants to make another high in a fifth wave, and I'll show that when we get below, but that still looks like it wants another high. So I think market will likely push higher. The CPI numbers came out today, 4.9%, a little less than, they're coming down slowly. A lot of work to do, though, and tomorrow we have PPI. Remember, that's price producer inflation, and of course initial jobless claims. And again, every day we update our KISS trend tables. So I invite you guys to use that to check the indexes and a ton of individual stocks like Apple or whatever, ETS for ideas for systems and where to set stops. Okay. Next. Item number 2 shows the index sector table, what transpired today and this week. So again, you can see with that rally back in the afternoon, the indexes managed to close positive except for the Dow, but NASDAQ up about 1%, S&P up 0.5%. For the week, pretty flat here, especially for the S&P. As far as the major market sectors here, we follow 21 of them. We don't have the regional banks on here. We have the regular bank sector. At least I think it is. Yeah, banks right there. So again, kind of a 50-50 mixture of up and down here, essentially. Pretty much the same for the week. And currencies, US dollar, down about 0.2% today, up 0.3% for the week. Cryptocurrencies are mixed here. I will note that the crypto stocks look pretty good. Riot, for example, we've had on the list, and I added a couple tonight to keep an eye on. Commodities here, mostly downside. Crude oil down 1.5%. Natural gas down 3.3%. Copper down 1.5%. Kind of a mixed bag in the agriculture area. Some of them are up, some of them are down. Precious metals, precious metals have been weak. Not surprising. Remember, we've been expecting a correction in that area. And seasonality, precious metals, gold tend to be weak from about mid-May to early July, so we'll see if that unfolds. And as far as the bonds and interest rates, 10-year, 30-year rates fell today. Next. Item number 3 shows the economic news calendar. Again, today we had the CPI. Tomorrow we have PPI, 8:30 Eastern, and of course initial jobless claims and those natural gas inventories. And let's go and jump to the index charts. First chart below, item number 4 is a daily snapshot of the 5 key major indexes. Again, a lot of chop lately. No changes here. It's what I discussed on the weekend or Monday. We haven't broken any of these trend lines, etc. NASDAQ here trying to break this a little bit. You could argue that the NASDAQ's in sort of a wedge here. There's not much of a slope to it. Sometimes, whenever you don't have much of a slope to a wedge, it's more of a flattish. Many times they're prone to break to the upside instead of the downside. So we'll see how that goes. The Russell at the bottom's been holding that important trend line. Like I've been telling you guys, if you're long the Russell, put a stop right there. It needs to hold that trend line. Okay? And let's go ahead and move on. Let's move to our proxy, the S&P 500. This is a weekly view of the S&P. And again, I've been discussing this on the weekend and on Monday, but obviously nothing changed on that. But like I said, if the market does kind of hold up, let's say into the summer, that's pretty much our primary view at this point. Remember, we called the bear market way back there in January. December 2020, 21 before that bear market began. But if we do hold up in the summer, chop around, the S&P needs to take out this little resistance area around the 4,200 area. One of our targets would be that 4,300, 4,350-ish area around the 61.8 fib. And we'll be watching over time that trend line on the RSI. Also, this is a timing indicator. Again, it's not, it's pretty rudimentary, but notice it would project to a high in the market maybe sometime in, I don't know, June, early July. So again, we'll see what happens over time. Again, that's a weekly chart. Nothing to worry about at the moment. Next. Chart 6, here's a daily view of the S&P. Again, just shows you we're just kind of chopping around here. And it kind of has a diamond look to it here. I didn't draw it in, but you can kind of see it if you see here. You can see this sort of diamond look to it. But anyway, a lot of chop lately. Again, should we get an upside push? We still have this big open unfilled gap from August of last year. Those open gaps like to be filled. So that would be a magnet, and then eventually maybe this upper trend line here, 61.8 fib. And we did hold the 50-day moving average last week on that sell-off, which we said was the important area. Next. Chart 7, here's another daily view. Shows you the same thing. And again, we also have this expanding coil here that the price has been respecting. Next. Chart 8, here's a half-day view of the S&P. You can see that expanded coil there. And you can also see, again, that kind of diamond look to it. Moving average ribbon's obviously still bullish as stacked. And I didn't draw it here, but again, you can see a resistance area up here. We'll see if that could be attacked or not over the next couple days. Next. Chart 9, here's a 60-minute view. As you know, I talked about this on Monday. We had that basically 3-wave pullback, A, B, C. Whenever you have only 3 waves, again, that could obviously turn into a wave 3 down, but it ended up being just an ABC, and it found support at that double bottom important support area. It was a good area to go long with a tight stop. We popped up, and since then we've just been going sideways essentially. Next. Chart 10, here's the daily KISS trend system for the S&P 500. Again, no changes here, obviously. Smart trailing stop is currently at 40.42. Okay. That's a place for a trailing stop if you're long the S&P, ETF in your 401k. Next. Chart 11, here's the 4 time frames we like to follow with these indicators. Again, not a lot to say here, just been chopping around. We had a support cycle on a half day, which price has been holding. We need to break this resistance, this ATR here. That would be important. Same on the 130-minute chart. And we did have a support cycle on the 78-minute, which we bounced from today. Next. Chart 12, here's a 15-minute view. And again, with fibs from the May 4th low to the May 1st high. Notice today's low corresponded exactly with that 61.8 fib. I always call that the master fib, guys. I know a lot of people look at the 50% and 38%, but really this is the big important fib. Whenever you get a retracement to there, you can almost always get a trade out of it. And if you look here, it's hard to see. There's a little doji there. Could have went long there, put a stop right there. Was a very low risk long. So we held that important support today. Rallied right off of it. Next, chart 13, here's the 10-minute view I was shown on the weekend and on Monday. We talked about this wave 5 of 3 up on the weekend. I was looking for a pullback and a wave 4, which we did essentially get, albeit very choppily. Now we did get a new high there as a wave 5, so it is possible that we get some ABC action before upside movement. Finally, chart 14 is a 5-minute view. It just shows you the choppiness lately, and you can see today we gapped up, sold off pretty strongly in about the 130 time frame, bottomed and had a V rally up. Now here's another educational note for you guys. Intraday, I like to note symmetry. So that was your largest rally intraday around that 10:45 to 11:30 time frame there. So you measure that. Then we had our bounce attempt at the 1:30 p.m. Once we broke, I call this a break in symmetry. Once we broke that, that was bullish. You could have went long if you were not. But as I just showed you above on the 15-minute, right at that low, you were at the 61.8 fib. So that was a good area to go long. Next, moving to the other indexes, chart 15, here's the triple Qs. Again, they've had this bullish expanded coil. Remember, these are 5 waves, A, B, C, D, E. That was the bullish way to draw it. A lot of times you'll make a higher low within the pattern. Otherwise, again, no changes. It's still working on this pattern that we've had drawn in place for really months now. Next, chart 16, here's a 2-hour view. It's still in the channel. Trying to break over this, we haven't yet. Again, there's not a lot of slope to this trend line here, so it could easily bust out over it. Next, chart 17, here's the 15-minute view. Again, I talked about this again on the weekend on the Monday that, just from an educational standpoint, and we're real big about education here. Whenever you have 3 waves down, and then you get a reversal, that's bullish. Okay, guys? That's simply a corrective consolidation pattern you can go long. Okay. Next, chart 18, here's the daily KISS trend system for the triple Qs. So currently, again, the smart trailing stops up there at 308.40. So no changes there. Again, it went long back here in mid to early March. Remember, guys, you can check these and individual stocks from the STS tables. Next, chart 19, here's the 4 time frames. We like to follow the daily, half day, 130 minute, 78 minute. You can see on the 78 minute, we were above the ATR. We held that. We had a support cycle there, and we rallied up. I really like the cycles, guys. I will do a video on that separately sometime. But, we had a support cycle yesterday on the half day, and that held. We have a resistance cycle here. We'll see if we can bust through that. Next, chart 20, here's Apple. Apple broke up out of this potential wedge. It's up near this resistance, which again is an area to expect to see a little struggle from, obviously. I don't see it just breaking out, running away from there. We could get a move up maybe, and then a pullback to retest that area, but we'll see. Next, chart 21, here's the Apple on the KISS trend system. So you can see how well this is done. It went long back here in mid-January, and it's been able to raise its stop. Remember, we call that smart trailing stop a good dozen times or more. It didn't move today, but it's caught that move nicely, and it constantly protects those profits. Again, the KISS trend tables, guys, are an excellent resource. So utilize that. Next. Now, I want to talk about Apple here, which I discussed in the comments of the opening part of the newsletter. So here's a 60-minute view of Apple. Steve had drawn this early in the week. And if you look here, you have a pretty obvious little 5-wave trend developing here. You have a little wave 1, 2, 3, 4. Notice we haven't made a new high yet, right? So this still argues for another high, at least for this wave 5 here before we get some sort of correction. So that may help the market here just because of that, okay? Again, to me, that's a pretty obvious 5 waves, and we haven't made the 5th wave high. Next. Chart number 23, here's a 2-hour view of Apple. Nice clean channel. And here, notice this potential flag. Here, I added a target. And notice that target measurement pretty much matches the top of that channel. So we'll see if that plays out. Pretty objective pattern. And if it does, that'll help with the market. Next. Chart number 24, here's Microsoft. Again, as you know, they went up strongly a couple weeks ago on earnings, and they just continue to power up. Remember, Apple, Microsoft, they're two of the biggest weightings in this whole market. Again, it's a few stocks leading the entire market, guys. Next. Chart number 25, IWM, Russell 2000. Again, no changes here. The bullish view here, like I said, is this A, B, C, D. Well, not a bullish view, but you have completed D here, and you're eventually going to get an E rally. Now, here's the thing. Wave E could go up all into here and then eventually crater. So that would allow for the market to, go up into the summer sometime, form that wave E, and then puke again. Again, like I said, if you're long the Russell, you got a higher low to put a stop. This cannot go below here. If it does, that would be bad, and this whole pattern would be negated. Okay. Obviously, the Russell's struggling, but if the market does hold up into the summer, I do expect this to work higher. Short term, you have the moving averages here to work through. Next. Chart number 26, there's the 2-hour view. No changes there. Kind of a diamond look as well. So that does it for the market, guys. Let's go ahead and move on. Chart number 27, here's the VIX. So the VIX was initially up today, then reversed. So it did go on a VIX Bollinger Band signal last week when it was outside its Bollinger Bands, closed back inside. Remember, this is a system chart for the VIX with the Bollinger Bands. There's your rules. Whenever you're outside the upper Bollinger Bands and close back inside, that's a buy signal. And when you're below the lower Bollinger Bands on the VIX, close back inside, that's a sell signal like you see there. Okay. Next. Chart number 28, in case you ever wondered what the statistics are to that system, here they are. I wrote that for TradeStation. So going back 15 years, again, this just uses the standard Bollinger Band at 220 setting. That's 2 standard deviation length and 20 length. And I'm closing the trades out over the 9 SMA or 8 SMA. It kind of depends on if it's long or short. But you can see profit factor of 2, 79% winning trades, 173 trades going back, again, 15 years. And okay profit curve, you got a pretty good dip there. I imagine that's that March 2020 COVID sell-off. Next. Chart number 29. Here's the modified version of the VIX S&P system that I will be using for the website. Again, it's the same type of rules, but I'm using a little longer length, definitely a wider standard deviation at 2.8 for the for longs, much harder to trigger than a 2, and a 2.2 for the shorts. And you can see how the effect it has on a profit curve, on those big dips. And look at the profit factor, jumps from a 2 to a 31.5. You have a lot less trades. Instead of 179 trades, you have 125, and that's because you're filtering out trades. You're not triggering as easily because of the wider standard deviations. But you have almost 93% winning trades. So pretty damn impressive. Next. Moving on to some of these sectors. Chart number 30 here is XOK Technology. Again, just continues to work up in this wedge that we've had drawn for months now. Remember, 3 stocks make up 52% of this damn thing. Apple, Microsoft, NVIDIA. Highly skewed to the generals. Next. Chart number 31, here's semiconductors. Steve's kind of monitoring this little rounded top. But again, it could also bust out of here. Clearly, you wouldn't want to see this lower area lost. Next, chart 32. Here's semiconductors 60-minute view. You got a triangle type forming here, so you could trade this. For now, it looks bullish. Next, chart 33, XLF financials. Remember I talked about this the other day. We broke down from this channel, back tested the channel resistance, and now logically it's pulling back. That was a good area to short the back test of that channel. Next, chart 34, here's the bank index. Again, not the regional banks, but the regular banks. It's still very weak. All these rallies keep stalling at the 9 EMA there. And you do have a big divergence here, though, to be aware of. So we could be forming a low, but we really need to see a close above this 9 EMA in the short term. Next, chart 35, KRE. That's the regional banks. Again, it's weaker than the banks. We had that big kind of doji a week ago. We had our bounce back, but still, the 9 EMA is your resistance, and it was weak today. Next, chart 36, there's the logarithmic chart going back to 2009 lows. We essentially tagged that trend line last week, and then at demand zone. Next, chart 37, here's the 60-minute view. Notice, remember, the master fib, 61.8 fib. We're trying to hold that. If you were long here, you could put a tight stop right here just below 36.59. Next, chart 38, XLY consumer discretionary. Remember, I've been showing this tight coil. It's trying to bust out of here off the highs today, black candle. But again, if you triggered long, just stay long, have a stop. Let's zoom into that. Chart 39, here's a zoomed in view of that coil. So look, remember, proper coils are 5 waves, A, B, C, D, E. That would be the bullish way to label it. Again, we closed off the highs, but like I said, if you're long, no reason to sell it. If you wanted to put a tight stop, it could be today's lows or this higher low there, or the 20-day or 200-day moving average here. You got a variety of areas to put a stop. Next, chart 40, XLE Energy, still weak. You can see stalling right at its 9 EMA today. Next, let's go and move on to commodities. Chart 41, DBC. So up so far about 0.5% for the week. Again, this is your overall bigger pattern. So kind of noise on the weekly until you bust out of this. Note the 200-week moving average down here coming up pretty close, or pretty soon. Next, chart 42, crude oil. Again, crude oil rallied off this demand zone, pulling back a little bit today. Remember, you got a lot of resistance, 50, 200, or 50 and 20-day right here. But really, the 200-day moving average has been the key here. Since it lost the 200-day moving average in August of last year, it's become resistance and resistance last time. Next, chart 43, that said, the OVX volatility system for crude oil did go long last week whenever this was, again, it's just like the VIX system. Whenever it's outside its bands, it closes back inside. That's your buy signal. So far, price has been mostly, actually, if you bought it on Friday, you're up. And then since this week, it's been sideways, chop. Next, chart 44, natural gas. Big sell-off last year. It could be trying to build a base here, but again, don't be the hero and try to buy this early. You want to see it bust out of this base. Next, chart 45, here's a logarithmic view. Probably a better way to view it. Next, chart 46, copper selling off. Watch this 200-day moving average. You can see it was important resistance. We'll see if it acts as support now. Next, chart 47, DBA, agriculture, busted out of this kind of a flag channel last week. It back tested it, held it. So again, just put a stop maybe around the higher low here. Looks good. I do like the longer term view of DBA. I'm not showing that here tonight. Next, chart 48, uranium. This is the uranium ETF. I haven't shown this for a long while. Now this is a monthly chart. Okay, it's been moving up lately, but look at this super huge coil that is developing, roughly a year and a half long now. So big coil forming here. Ribbon is getting really tight. back here it was super tight, and then we got that big, it essentially almost tripled on that initial run, but it's coiling big time here. And with declining volume, which to me is bullish. Okay. Keep an eye on that. Next, chart 49, high yield corporate. High yield corporate bonds. Remember, this tends to be highly correlated with the market, so it's holding in here. It's got it. We'll see if it can break over this trend line. Next, chart 50, TLT, 20-year bonds bouncing off this little support. It's been in a chop range lately. Next, chart 51, Bitcoin kind of had a coil, broke the coil last night, back tested as resistance. Still looks a little weak to me, but the stocks are holding up better. Let's take a look at those. Chart 52, Riot. So Riot, Steve showed this as a nice coil last night. Broke out of here nicely, but again, pulled well off those highs. And, I got a couple Bitcoin stocks, but I got them buried lower with my trade ideas. I meant to move them up here. We'll talk about those in a minute. Let's move on. Chart 53, here's US dollar ETF. So far going sideways, forming a coil. See which way it breaks. Next. Chart 54, US dollar index. Again, it's trying to hold this demand zone. It's essentially, it's fighting really hard to keep this area. We'll see, can it bust out of here, or is it going to break down? We'll see. That'll likely, again, affect the market, commodities, precious metals, stuff like that. Next, chart 55. Going to move on. I've been discussing this chart, so let's go and move on. Chart 56. Gold down a little bit today, still holding that 9 EMA. Again, it's had a hell of a rally from the October-November lows, and we were bullish on it. Seasonality-wise, gold tends to be weak around now. We'll see if that starts to transpire or not. This last high did have a divergent high on the MACD. Next, chart 57. Here's another view of gold. Could be forming a rising wedge here. Okay, note the MACD divergence here, but if I look at this wedge, 1, 2, 3, 4. So you could have 5 completed waves now, or, and again, it's possible you could also go up in the wedge one more time and then bust down. So we'll see which scenario plays out. Next, chart 58, gold on the weekly. Like I said, it's up here at this resistance. Logical area for it to at least, stall or whatever before eventually breaking out. Again, I am long-term bullish on gold, guys. So we'll see. I do welcome a consolidation if we get it. Next, chart 59. Here's another weekly chart of gold. Just shows you how it's up at this upper resistance and this potential wedge forming. Again, I would love to see a correction here so I could buy it again. Next, chart 60. There's the monthly view. Kind of my best guess is that gold completed a 4th wave pullback there in 2022, and it's had wave 1 of 5. Remember, wave 5 should have 5 waves. So this is only wave 1. We'll eventually get our pullback, wave 2, and then off to the races in 3, which we're likely to see gold way up in the 2,500, 3,000 area. Next, chart 61, table 61, this shows you, seasonality of gold. Again, it tends to be weaker May, June, stronger in July, August. We'll see if it plays out. Next, chart 62, daily version of gold, still holding on that 20-day moving average here. You got your big support here. This 20-day moving average, though, guys, that's important right here. If we lose that on a closing basis, then that'll open the door for gold to retest its 50-day moving average. Okay. Again, I would love to see it happen, but just be aware that we're still holding the 9 EMA on a closing basis, still holding the 20. Those are your important areas. Next, chart 63, GDX, 60-minute view. Again, it's still hanging in there for now. Still has kind of a cup and handle look to it here, unless it busts down. Next, moving on to trade ideas and stocks. So chart 64, Google. I had this as a long idea on my weekend newsletter and on Monday. It busted out today nicely. Now, it did break this coil yesterday. I know some of you bought it. Again, but if you did buy it yesterday, there was absolutely no reason to sell it. Why? If you bought it from a swing trade perspective, as I discuss here, looks like I got a potential typo there. But anyway, remember, don't mix your time frames up, guys. If you're buying something for a swing, then you need to give it wiggle room for a swing. Don't stop out on noise. So if you bought this yesterday and then it reversed, there was no reason to sell that unless you were a day trader. Your initial stop's going to go right here, this area or this high or low. Okay. You got to give this stuff room to work. Next, Chart 65 AMD. This is a long idea in my newsletter on the weekends. Had a nice week so far. Next, following up on some other names, Chart 66. Geo was a long idea of mine on Monday. Huge breakout yesterday and was even up today before it reversed. So really nice move. You had a nice divergent low. You had a clean resistance here. It was a good trade. Like I said, we've had really nice trade ideas here lately. Next, Chart 67. CRM was a long idea on Monday. Also broke out yesterday. Followed through today. Simple breakout over 200. Congrats if you got it. Next, Chart 68, UXIN was a long idea of mine on Monday. And this is the reason why, guys, you should be a subscriber to Breakpoint Trades if you're watching this on YouTube. This was put out on Monday's newsletter. It was a cheap price stock. Resistance was 120. It rallied over 30% on Tuesday. Followed through today, almost tagging that 50-day moving average. Again, that's a huge percentage move, guys, from $1.20 to today's highs at $1.71. And this would be my target up here. This horizontal resistance, which used to be support. Next, Chart 69, ROIV. This was also a long idea of mine a couple weeks ago. It triggered a week ago, breaking this little downtrend line, and then you could have added on this 9 break. Pull back today, but is there a reason to stop out of that little pullback? Look at the volume. No, keep a stop in place. It's fine to lock in some gains, but overall, this is my target. Next, Chart 70, PLL. Here's one from Steve last night. Nice coil, busted out today. Next, Chart 71, McDonald's. This is a long idea of ours back in March. Just been marching higher. Again, as I stated on Monday, I'd probably have a stop right here at this point. No reason to give any more room. You can see how momentum's been waning on that MACD. Next, Chart 72, KB Homes. Home builder that we've had on the list since April. Really nice. Just trail the stops up below the 9 EMA. Next, Chart 73, Edit was a long idea last week. Was an absolute textbook pennant, bull pennant pattern. Big move last week. More than hit its target. You know, this is one you should be out of. Congrats if you caught it. It was a heck of a percentage move. Next, Chart 74, Stein, STNE. Beautiful base pattern. This is one from last week. Trigger was around the 12 area. My initial target's at 15. Next, Chart 75, Netflix. I put on the list on Monday this kind of coil-like pattern. It's not a traditional coil, guys. There's not 5 waves here. Okay. It's trying to break this trend line here. Next, Chart 76, Amazon. Nice day for Amazon. I like the look of it here. It looks like it wants higher. Look at that volume. Next, Chart 77, INSW, one from Steve last night, kind of a falling wedge into the 200-day moving average. Up today, still looks decent. Next, Chart 78, BITF, Bitfarms, one of these Bitcoin type plays. For now, again, given the volume patterns, it looks bullish, but this is your trend line it needs to break. Next, Chart 79, MSTR, another Bitcoin type stock, MicroStrategy, and another one to monitor as well. It's expensive puppy. Next, Chart 80, here's a new one, Abbott Labs, kind of a cup and handle look. Next, Chart 81, APLD, another new one, kind of a cup and handle look as well. You know, this is one to watch for another breakout over this trend line. Next, Chart 82, GRPN, nice base on this one, nice volume today, resistance right around this 430 area. Next, Chart 83, Omar, Kind of a big flag pattern. Nice move today. We'll see if we can get some follow through on it. Next, Chart 84, BHIL, Benson Hill. Beautiful breakout from this base, big volume, obviously news induced. I show this as a possible momentum play. This is your resistance. We'll see if it can work its way up to that area. You need to look for an entry, obviously. Next, Jabber 85 XMTR. Big move today. Again, this is a pure momentum play. There's not a stock pattern here. You just got big volume, so a trigger would be over today's highs for a trade. Next, Jabber 86 Halo. Reminds me of that game and Xbox. Same deal. Huge breakout. This is a breakaway gap, big volume. So here, momentum play over this high. Easy target of the 50-day moving average there. All right, guys, that'll do it. We'll see what happens tomorrow. Quick check on the futures here. ES futures are up about 9 points tonight. So, again, we'll see what happens tomorrow and the rest of the week. And talk to you later. And I appreciate the support. And please leave a like on the YouTube video. Take care.